Welcome back. We're now hearing Internet Computer is launching layer 2 on Bitcoin. We're going to be covering that topic along with many others in today's video, including Wall Street is in control. They are now controlling the majority of the crypto space. And we are now hearing that Grayscale's CEO is stepping down as a Goldman Sachs executive is going to be taking his place. So we got a lot to discuss in today's video. We're also going to be covering the pension funds buying Bitcoin. Wall Street is using Chainlink. Stellar Blockchain, which we haven't covered in quite a while, is getting venture capital backing from the likes of some big crypto bulls here. And so we have that along with many other topics in today's video. Make sure you guys are subscribed to the channel. That way you never miss a new video. We upload quite often on this channel. And also give the video a free thumbs up. That way you never miss a new video. Lets me know you guys enjoy this kind of content. But let's start right here. Grayscale CEO Michael Sonnenschein steps down as a Goldman Sachs executive takes his place. Basically, he's going to be succeeded by this guy who's a Goldman or former Goldman Sachs global head of strategy for the asset and wealth division. He previously held positions related to strategy, mergers, acquisitions, and investor relations at BlackRock, Oppenheimer Funds, and Invesco. And he's going to be taking the helm of Grayscale on August 15th. So just a few months away. But remember, June is when the deadline for the the Grayscale Ethereum ETF is going to be. That's the deadline. Personally, guys, I think that the Ethereum ETF is going to be approved. Previously, I've been very bearish on this, but I think it's going to get approved this year. Now, whether it happens in May, in June, July, August, I don't know. But it just seems like this little bit of a shakeup is kind of in the broader picture of what is happening in the crypto verse, right? Since these Bitcoin ETFs have started at the beginning of 2024, right now they have multiple billions of dollars in each of these ETFs. Some of the smaller ones have obviously less, but Wall Street is in control, and they now effectively control most of the Bitcoin network. We have covered the Bitcoin mining industry has expanded rapidly in the United States. I'm extremely bullish on Bitcoin mining ETFs, or I should say Bitcoin mining stocks like TerraWolf, Riot Platforms, Marathon Digital, Iris Energy, Griffin Mining. I mean, I can keep going on. There's a lot, and they're all pretty much based in the US. There's a few that are in Canada, and obviously there's individual companies around the world that are still mining Bitcoin, but these are the megas, right? And so they're now mostly based in the US. Most of them are on the stock market. And we're now hearing that pension funds are also buying into the Bitcoin space. Now, this doesn't really surprise me because if you guys remember the last bull market, right? We found this out in the bear market after FTX collapsed, that pension funds, teachers' retirement funds, and a lot of these like self-sovereign funds for these states and public institutions, they were buying and investing in FTX. They weren't investing in Coinbase, they weren't investing in Grayscale, they were investing in FTX, and a lot of them lost quite a bit of money. And so that told me that there was an appetite for getting into the crypto space, but they just didn't know how to do it because we didn't have Bitcoin ETFs then. Now we do. And I think that because of what we're seeing here, it's telling Wall Street they need to step up their game, and not just step up their game, but expand their product offerings. And so this is why I'm getting a little bit more bullish on the Ethereum ETF. State of Wisconsin buys nearly $100 million worth of BlackRock spot Bitcoin ETF. The investment board bought 94,562 shares of BlackRock's Bitcoin trust in the first quarter of the year. And remember, most of this was bailing out a lot of these companies like FTX, Celsius, Gemini, Genesis, etc., from the collapse that occurred, after the FTX situation. Eric Balkunas, who's an ETF analyst over at Bloomberg, he said, normally you don't get these big fish institutions in the 13Fs or those SEC filings for a year or so. But as we've seen, these are no ordinary launches. A good sign, expect more as institutions tend to move in herds. And I would agree. Listen, I don't agree with everything that Bloomberg analysts say, but I agree with this. The appetite was already there. These funds and these companies, they just needed the the avenue to actually go and own these cryptos or own exposure to the cryptos in a more safe environment. And so this, I think, is just extremely bullish because this is the investments that have already occurred at the launch of these ETFs. What's going to be happening as the Federal Reserve starts to ease, or we start to see more growth in the economy? We're also hearing Stephen Cohen's Point72 Ventures. This is another kind of private hedge fund, is also the owner of Bitcoin via spot ETFs. Roughly 13 out of the 25 biggest US-based hedge funds held the spot Bitcoin ETFs at the end of March, according to data. Now, Point72 is a big crypto investment firm. Steve Cohen, they also own the Mets, which is a baseball team, and they were involved in crypto in the previous cycle, right? And they were involved in investments in the previous cycle, but now we're seeing, right, they're putting their money in kind of more of these safer investments. As we just covered, I don't know if we covered it in a YouTube video, but I definitely had it over on my X page, x.com/the Cryptoviser. You can see my link over there. What I covered is MicroStrategy. There's there's a lot of large holders of MicroStrategy right now, but you can see BlackRock and I think it was Vanguard, they each own over $1 billion in stock of MicroStrategy. When I'm recording this video, the MicroStrategy market cap is between 20 and $30 billion. And just these two investment fund managers, they own basically 10% between the two of them. They own each about $1.5 billion worth of MicroStrategy. And remember, previously in April, in March, in February, we saw that Michael Saylor was selling about $300 million worth of the stock to MicroStrategy, his own stock. He owns zero of the stock now. I would imagine he's buying Bitcoin with it on the back end. We haven't heard any announcements about that just yet when I'm recording this video, but I would imagine that's what he's doing with the money. But in the same time, we saw the MicroStrategy stock continuing to move higher. And my question was, who is buying all of the MicroStrategy stock? If it's not, if the CEO is selling it, like who's buying it? And why is the price staying elevated? 5x from where it was last year in the $200 range, and now we went up to basically to $2,000. Now we know Wall Street was buying MicroStrategy stock. So Wall Street is buying the Bitcoin ETFs. The Bitcoin ETF issuers like BlackRock and Vanguard, they're buying MicroStrategy. Wall Street is in control. And this is why I think a lot of analysts believe that this is going to be the last major cycle in crypto. I mean, we may not even see it, this major cycle that everybody's anticipating, because most of the buying has already been done, right? I mean, these Bitcoin ETFs, tens of billions of dollars, just in the first few months of the year. And granted, the price did go up in Bitcoin, but where is more of that liquidity going to be coming from? I don't know, but all I know is Wall Street is in control, and that is really important to keep in mind. We're also hearing another investment firm called Millennium Management held $2 billion worth of the shares in at least 4 Bitcoin ETFs. And obviously, we just talked about Steve Cohen's Point72, and also Elliott Investment Management own them as well. Others range from the state of Wisconsin in board to the Bank of Montreal among firms holding Bitcoin ETFs. And it's very easy to find this. You just type in like institutional ownership of any individual stock, and you'll see that kind of reporting. But guys, there's other stuff going on, and this is also important for us to keep in mind, right? We see the Bitcoin ETF inflows and outflows daily, right? Hundreds of millions of dollars in some days. But we don't necessarily see the price moving rapidly as soon as those prices occur. And this, to me, it just doesn't make sense. Let's say in the Bitcoin ETF, let's say IBIT, which is BlackRock's Bitcoin Trust, right? Or a Bitcoin ETF. Let's say nobody touches the stock for one day. No institutions, no individuals, except for one person. And that one person buys $100 in this ETF. Where is that $100 going? Is it just trading, or are they actually going and buying the Bitcoin? Like this, I truly don't understand. This one, I think he's an investor and a trader on X, Tyler, Bitcoin OG at Soap Capital. He said BlackRock can take as much Bitcoin as they want from Coinbase, and the transaction is recorded off chain. He said, I'd like to see all the ETF wallets. Thanks, Brian. And effectively, this is a conversation that we need to understand, especially if you're an investor, right? if they're recording these off chain, right, where is the actual trading going on? And why are we not seeing these ETF wallets, right? Keep in mind, Grayscale, the big question for years has been where are Grayscale wallets? And Grayscale said that they would not release the addresses of their wallets for security purposes, which I also understand. But people were like, why are they not releasing their wallet? Like, so you can check proof of funds. Big question mark there, right? But anyway, this is the excerpt, I'm guessing, from the SEC documents from the BlackRock ETF. It says the transfer of Bitcoin from the trust trading balance to the Bitcoin trading counterparty's account at the prime execution agent or the prime execution agent is an off-chain transaction that is recorded in the books and records of the prime execution agent. Effectively, just think about Coinbase. They're executing these trades and they're the custodian, and BlackRock is the fund manager. The trust trading balance with the prime execution agent may not be funded with Bitcoin on trade date for the sale of Bitcoin in connection with the redemption order, when Bitcoin remains in the trust vault balance with the Bitcoin custodian at the point of intended execution of the sale of Bitcoin. Effectively, the way that I read that is the ETF wallet may not actually be funded or with removing the Bitcoin or adding the Bitcoin on chain on that day, right? It's kind of like, the way that I think about it is kind of like a mempool, right? Kind of how Bitcoin holds these transactions that don't process immediately in the mempool, the memory pool, and then eventually they get processed, right, on chain and get confirmed. This is kind of effectively the same thing. So let's say somebody sells $1 million in Bitcoin ETF. Coinbase may not make that sale that day. They may hold that sale, fund, give the person the money for that sale or whatever, but they may not actually sell the Bitcoin because they believe tomorrow or the next day or the next day after that, somebody's going to buy $1 million. So they can just process the transaction on their books, but not actually do it on chain. This effectively sounds very similar to the way that a lot of Bitcoin trading works with these exchanges, right? If you go on Coinbase and just the regular Coinbase exchange and you just buy, let's say, $100 in Bitcoin, that transaction may not be an immediately processed transaction. This could be people who have had orders on the books for weeks or months or whatever, right? That's kind of the way that I'm thinking about it. It's not that they're doing this to confuse us. I think this is just an easier way to process all these transactions instead of individually managed. But anyway, continuing on, it says, in those circumstances, as the trust may borrow trade credits in the form of Bitcoin from the trade credit lender, this allows the trust to sell Bitcoin through the prime execution agent on the trade date, and the cash proceeds are deposited to the trust trading balance with the prime execution agent. For settlement of a redemption where a trade credit is utilized, the trust delivers cash to the authorized participant in exchange for the shares received from the authorized participant. In the event the trade credits were used, the trust will use the Bitcoin moved from the trust vault balance with the Bitcoin custodian to the trading balance with the prime execution agent to repay the trade credits borrowed. Effectively, they're borrowing and lending Bitcoin that may or may not exist at that particular time. Like I just said, somebody makes a sale, Coinbase will fund that sale, and then they'll kind of hold that Bitcoin, on the side for somebody who's purchasing instead of selling their ETF, and then they process the transaction that way. That's what it sounds like he's saying here. He said this means that the ETF issuer can borrow Bitcoin from Coinbase to short and are not required to show any proof that they hold 1-to-1, meaning 1 Bitcoin per, whatever the holding looks like for that. There's also a 2 to 30 day settlement period. All settlements are done in cash. So listen, some people are surprised by this. I'm personally not, but again, it just kind of goes to show you, like, Wall Street is in control, right? They've already tested the market. They've already sold off some of the Bitcoin ETF recently. We saw this happen, and then what happened to the Bitcoin price? It dropped from 70,000 to 60,000, and then they started buying it back up. But they were testing it, and it wouldn't surprise me that they're testing it. We know BlackRock tests certain things. A few years ago, they went on, CNBC or Bloomberg, and just mentioned Bitcoin once, and then they watched, the the social media engagement, how many visits to their website after that, and they said that they were amazed at how much interest people had just by them mentioning Bitcoin once on one news channel. It was very interesting. So we know that they're doing this. Again, they are in control. That's where the market's going to roll. And I mean, listen, some of these smaller coins, yeah, they're going to pump extremely high. But then you have other coins that, Wall Street is not interested in. Just to give you guys a little bit of insight, if you go to Coinbase, either on the app or on the website, you can actually see in the individual coins the typical hold time of these coins on the exchange. Now, this you could use as an indicator. Maybe it means something, maybe it means nothing. I don't know. But I was like, what is the whole time of the coin that we used to talk about on this channel a lot, right? I'm not even going to say the coin. This is the longest hold time that I've seen out of any crypto. The only closer one was Solana. Solana had about 190 or 180 day hold time. But other than that, this coin, 294 days. It says the median time that Coinbase customers hold this coin before selling it or sending it to another address or account. Long hold times can signal an accumulation trend. Short hold times indicate increased movement of tokens. This coin has not moved in almost a full year, right? The typical hold time, which tells me people are not trading it. There's no real interest in it. People are not using the coin for staking and or not using the coin for DeFi. And so, yeah, like look at the other coins that Wall Street is interested in. Look at Ethereum, look at Bitcoin, even look at Avalanche. These hold times are much lower than this coin, almost 1 year. And some people will say, "Oh, well, that's great. We have diamond hands," or it could mean people are in the red and they can't get out of that position. And so again, this is why it's important that we understand what Wall Street is doing, why USDC is super important, and look at what is happening right here. DTCC Chainlink complete a pilot to accelerate fund tokenization with JP Morgan, Templeton, BNY Mellon are participating. These are major banks, and DTCC is the Depository Trust and Clearing Corporation. This is the world's largest securities settlement system. Effectively, when people are people are going to list something on the stock exchange, it goes through the DTCC. Anyway, they completed a pilot project with blockchain oracle Chainlink and multiple major U.S. financial institutions aiming to accelerate the tokenization of funds. According to a report published by the company, the purpose of the project, called Smart NAV, was established a standardized process to bring and disseminate net asset value data of funds across virtually any private or public blockchain using Chainlink's interoperability protocol, CCIP, which is Chainlink Cross-Chain Interoperability Protocol. Market participants included American Century Investments, BNY Mellon, Edward Jones, Franklin Templeton, Invesco, JP Morgan, and others. And so by completing the pilot, they found that by delivering structured data on-chain and creating standard roles for processing, foundational data could be embedded into a multitude of on-chain use cases such as tokenized funds and bulk consumer smart contracts, which are contracts that hold data for multiple funds. And so you can see how this whole system works. We're not going to go through that in today's video, but you guys kind of get the point. This pilot took place as tokenization of real-world assets such as bonds, funds, and other traditional investments had become one of the hottest use cases for blockchain technology. Here's the deal, guys. I know a lot of people are going to say, but Cryptoviser, crypto is supposed to be anti-bank, anti-institution, all of this. In a way, yes. But at the end of the day, this is a new form of money. Right. And the banks are not going to let this just kind of go, and they have no control over it. Wall Street, same thing. And they also see the opportunity to make money. Right. At the end of the day, we're here to make money. Right. There's people who say that they're not, and maybe that's why they're holding their coin for a year and they can't get out of their position. Maybe that's true, but the majority of people in these markets, they're here to make money. And people who are saying that they're not here to make money, I don't know, maybe they're not, or they're just being dishonest. But the point is, you can say, but Cryptoviser, we don't want Wall Street. Wall Street is going to control it and not make any money. Or you can just say, okay, this is what is happening. This is where I need to focus my investment strategy and thesis. This is all about pivoting, all about adapting and changing to the needs of what is coming. Guys, There's a lot of people who are not going to be, they're in a field that they went to, like, I am friends with somebody who has 2 degrees, and they took out private loans, not even government loans, private loans for an institution to learn a trade. I don't want to give out too much info, but they learned a trade, and effectively that career line is done. I mean, it's not completely done, but it's basically almost done, right? It's being automated, standardized, and just downsized. There's no money to be made there, right? It's the same thing like growing up, everybody wanted to become a doctor or a lawyer. And now doctors, yeah, it's still a fairly well-paying job, but they're also working 20 hours. They have to be on call all the time, right? It's not what it used to be. And my thing is adaptability and changeability in these markets. With AI coming to jobs, right? People are going to say, "Well, I lost my job because they automate the process." It's like, yeah, but we know that that's going on right now. So if you're not preparing for what that future looks like, where AI is taking jobs, right, and jobs are being kind of recalibrated and thought about, you're going to be left behind. I mean, you can't wait till it happens and then say, "Well, I lost my job. I got laid off. Now I'm going to just go find another job," because thousands of other people are also in the same position as you. And so now you're competing with all these people instead of trying to stay ahead of the curve. That's my biggest thing, right? I don't like to see anybody getting left behind, right? But there are people, especially in the investment world, they're going to be left behind because they're like, "But Cryptoviser, I don't want to get a Bitcoin ETF." It's like, okay, you want to make money or you don't want to make money? Like, that's the bottom line. Cross-chain interoperability is essential. It is key. And not just cross-chain interoperability, but also stable coins. Now we're hearing, guys, this is any coin, I've explained this before on my channel, any coin, any crypto, any blockchain that is not tied into USDC, in my view, it's a guaranteed fail as we go into the next bear market and the next cycle, right? We already have to be thinking about that because we're already in the bull cycle right now, which means within 18 months to 24 months, we're going to be rotated into a bear market. Now, stablecoin issuer Circle files to shift legal home to the US from Ireland ahead of their planned IPO. Now, if you remember, back in 2019, Jeremy Allaire, the CEO and founder of Circle, he went in front of Congress in the US and said to them, "If you guys don't provide clarity with stablecoins, we're leaving the US. We cannot operate in this environment." Well, the Congress didn't do it, and they were out by 2020. They left the US. And so now, what are we hearing about? They're coming back. They want to IPO and potential stablecoin legislation that is going to be pushed through. I don't see Circle moving back to the US unless they think it's a lock. And so this is the digital dollar. We've discussed this before. USDC is the digital dollar. It is the liquidity in the system. And so these blockchains that have been getting rapidly added, these are going to be the winners because they are going to be tied in. They're going to be with Wall Street, with funding from these institutions into the cryptoverse. And these blockchains that don't have USDC, that don't have Tether tied in, and that don't want it, again, they're not adapting, they're not changing, they're going to be left behind. It is what it is. I mean, listen, we've been talking about with the Internet Computer also needs USDC. I haven't heard one person in the Internet Computer ecosystem or engineering teams or thought leaders, anybody say about Internet Computer that they don't need USDC. Granted, a lot of people are saying, but Internet Computer already has USDC, but it's not natively issued. And so the fact that the Internet Computer ecosystem is open to this tells me that there's potential, right? Whether they get it or not, I don't know. I mean, Dfinity is not a US-based company. It doesn't seem like the US is really their focus and target audience necessarily. Maybe it is. It just doesn't seem like with some of these other cryptos where they're specifically kind of focusing on, Wall Street and US. I don't know. But the bottom line is, these things that we're talking about, it's not like these are all my opinions. Keep that in mind. None of this is financial advice, but this is based on the facts that we're seeing in the market, right? The market wants USDC. Wall Street wants USDC. So if you want to make money in these markets, you have to say, okay, I may not agree with USDC. I may not personally want USDC, but if I want my valuation to go higher, what needs to be done for that to happen? More use cases, more usage, more engineers, more venture capital money, more Wall Street. And I'm not just talking about US based Wall Street. I'm talking about these markets around the world, right? Hong Kong has a Bitcoin and Ethereum ETF. You think that that's going to be it? No. But there's not that much interest in those, right? The inflows are much lower than what we're seeing in the US. So again, this is my analysis. USDC is key, Wall Street is key, venture capitalists are key, and usage of the blockchain are key. Some blockchains get it, some don't. And in my view, this is why we have long hold times, the longest hold time in that asset. But if you look at other cryptos, like we were just talking about internet computer, they understand the need for interoperability and to solve problems on these legacy blockchains. Now, we know Dominic will say internet computer is the first third generation blockchain. His view of generation for blockchains is different than mine, right? Generation one is Bitcoin. Generation two, this is my view. Generation two is the Ethereums of the world. Generation threes are like the XRPs and the Cardanos of the world. Generation four is really where internet computer is. And then generation as maybe Solana as well. And then generation five is kind of the blockchains that we're seeing pop up today, like the Sui blockchain, the Sei blockchain, Celestia blockchain, all of those newer ones. But either way, the bottom line is the internet computer and Dfinity teams understand interoperability is the key. And so how can you solve problems on other legacy blockchains that no other blockchain has been able to do? Internet computer-based Bitfinity EVM, or Ethereum Virtual Machine, launches as a Bitcoin layer 2 and supports runes, which are effectively ordinals or NFTs. So what in the ICP is going on here? Well, Bitcoin layer 2, Bitfinity, has introduced the EVM to bring smart contracts to Bitcoin protocol and harness runes to enable DeFi apps. Built on the Internet Computer Protocol, Bitfinity integrates with the Bitcoin network and allows asset bridging to other blockchains. Internet Computer's tech stack will allow applications to use Ethereum smart contract programming language Solidity to access Bitcoin-based tokens. The Bitfinity EVM is designed to allow developers to deploy Bitcoin-based Solidity smart contracts, allowing them to transfer Bitcoin ordinals and runes, according to an announcement this month. Now, why is this important? I mean, if we understand where this industry is going, where the technology is going, where the venture capitalists, BlackRock, Vanguard, all these big money institutions, they're going to accelerate the use cases, the adoption rate, and effectively the value increase in these chains, right? There's still people out here who are in denial that Solana is, like I told you guys many times, and I even have videos, I was wrong about Solana. Does that mean I'm going to go and buy it right now at $180? No. Does that mean that I'm a bad investor? I mean, maybe, maybe not. I don't know. I mean, you're not going to win on every single trade. But when I'm looking at why Solana is winning, well, they have the venture capitalists, check. They have USDC, check. They have use cases, check. They have issues that other blockchains will call out and say, ha, 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 your blockchain goes down constantly. But meanwhile, why is the blockchain going down constantly? Because there's increased demand. And what are the developers doing on the back end? They're fixing that issue with the throughput so that they don't have these scaling issues. I mean, any company, any blockchain, any technology, as it scales, it has new issues that arise that it needs to address. And yeah, previously, you know, launching a blockchain that can't stay up, that's clearly an issue. But we haven't really seen that issue continue to rise, but people will still focus on it and say, well, Solana can't go to the moon. Guys, they have USDC, they have venture capitalists, they have a lot of millionaires and billionaires that are financially invested in Solana. So what are they doing? They're also paying other companies to build more products and more use cases on Solana. So Solana becomes so big and used so widely by many different companies and protocols, et cetera, that you have to onboard Solana the same way that you have to onboard USDC. And these blockchains that don't do it, it is what it is. It is what it is. So, you know, when I'm looking at this market, this is how I analyze the market. And I have to change my opinion. If Solana goes under $100, will I buy it? It's more likely yes now than it was a year ago, right? That doesn't mean I'm a bad investor. This just means that I'm able to pivot and adjust my thesis and my strategy for the markets. This is why we always say, like, don't marry your bags, right? Bag-itis. That's, I think, one of the other YouTubers coined that phrase recently, bagitis. Anyway, CELO community ratifies plan to use Optimism's OP stack for a new layer 2 chain. This vote passed with overwhelming support, with 65 addresses representing 14.6 million CELO tokens, signaling approval for this measure. Now, we've covered this before, that CELO is going to effectively move into a layer 2 on Optimism, basically migrating from its current standalone blockchain. Now, some people will say that this is not great because they're leaving Ethereum, they're leaving a standalone, but they're moving to Optimism. But in my view, this is CELO saying, okay, how can we optimize this blockchain, optimize the use cases? CELO has so many integrations already, right? I mean, and large companies that are running nodes on their chain already. And so, granted, 65 addresses voting for this is not that much. But CELO is still a fairly newer blockchain, and we just released a video the other day called Exploring CELO. I definitely recommend going and watching it, where we kind of explore the CELO ecosystem and understand, is this blockchain investable? Is it a good investment, and all of that? I mean, it's at pretty low prices right now. You can see this big spike that we saw in the beginning of March of 2024, just a few months ago, to $1.77. That's basically a little bit more than double where we are today. And so, I mean, I do own CELO, and I think that what CELO's doing is great as well. I started looking into CELO because they got native USDC on their blockchain, right? And so being able to pivot and say, okay, wait, USDC is going on CELO, this could be really good, right? And then I looked at the price of CELO. I looked at the market cap of CELO. I looked at the tokenomics of CELO, and not everything looked 100% like, wow, I want to plummet all my money in this, but $456 million, right? This is under $500 million market cap, based on all the other blockchains that are on that USDC has integrated with at a native. I mean, they've done incredibly well over the year or two after the integration. So 456 million to get to 5 million, 10x. I think that's going to be fairly easy in a bull market. Not financial advice, do your own research, but let me know what you guys think about that. Now, another ecosystem that we have talked about previously, and I was a big bull on, but now I'm not, is Stellar. Now, remember, I owned Stellar for many years. I was buying it up, but the thing is, we still, to this day, don't know what Stellar Development Foundation, Stellar Blockchain is doing with the XLM coin. Stellar is a great blockchain. It's being used by a lot of institutions. I think they have USDC native on the chain as well. But there's no conversation for years, 4 years at least. There's no conversation about how XLM is being integrated into any of their products. And so, within the last year, I dumped pretty much all my XLM because it's not investable at this point, right? Because we don't know how Stellar is using XLM. It's the same thing like XRP and Ripple. Ripple doesn't need XRP. Granted, they can use it, but they don't need to use it for you to use RippleNet. So these are two big differences from you have to use Bitcoin network, and that brings value to the Bitcoin price because you're using it. And Bitcoin is what funds the mechanism of how everything runs. But in the Stellar blockchain, Stellar ecosystem, we don't see that. That doesn't mean there's not development going on, and maybe it's not an investment for me, but it is an investment for you, right? Do your own research. Draper University, which is from Tim Draper, is going to invest in the Stellar ecosystem with new accelerated programs focused on AI and Soroban. Soroban is their smart contract platform. So this is from the middle of May 2024. Draper University, a leading blockchain education and acceleration program, announced its support for the growing Stellar ecosystem through the launch of Draper University and Stellar Astro Hacker House, and the Draper University and Stellar Embark accelerator programs. These groundbreaking initiatives will positively impact up to 80 startups building on the Stellar network over the next 2 years, further boosting adoption of Soroban, the smart contract platform on Stellar, and helping position Stellar as a leading blockchain for AI integration. And again, we just covered Internet Computer. They already have a live product. They already have been developing AI technologies. We've already seen, granted, it was very basic kind of AI compute on Internet Computer, but this is the first release on Internet Computer. And remember when I told you about Fetch AI, SingularityNet, and the Ocean Protocol merging into the Superintelligence Protocol, whatever it is? They're starting the development for that now. We're already in the bull market. Stellar and Draper University, they're starting that development now. So by the time they have this technology ready, at the earliest stage, it's going to be 2 years. I mean, you see this in the announcement. So you have to wait 2 years for just to get a MVP, minimum viable product. Meanwhile, Internet Computer already has that. So Internet Computer is already ahead, and Stellar is behind by 2 years at least. And by the way, by the end of this 2 years, maybe there's going to be new technology, and AI is not going to be the big thing that is going to be integrated, or it's already integrated in all these other blockchains. And Stellar's now like, well, look at us, we now have AI capabilities. Well, is that going to be as exciting in 2 years as it would be today if they had the technology today? I don't necessarily know. And again, no conversation about how XLM is integrated at all. There's no conversation about that. And granted, not every blockchain is going to be a crypto coin chain, right? Like, just put it that way. USDC is a crypto coin, but you could make money on the interest on it, but really you can't make money on USDC. It's a stable coin. But that doesn't mean it doesn't have its place in crypto. Stellar, maybe they're not going to be using XLM at all, and there's no value proposition for XLM, but that doesn't mean the blockchain and the technology is invaluable and isn't going to be used. Big difference between the blockchain and the value of the coin. Keep that in mind. So yeah, Tim Draper posted this. He said, exciting news is that Draper University is teaming up with Stellar Organization to accelerate and fund up to 80 startups to build Stellar over 2 years. We're calling it the best blockchain startups to apply for the Stellar Astro Hacker House or the Embark Accelerator program. And again, venture capital money coming into the ecosystem, funding these projects to build. And you have other ecosystems that are just using the treasury, or through inflation, they're just printing coins and giving it out to these developers that are creating effectively nothing for the chain in terms of usage and adoption and value proposition. And it's just diluting everybody else in the ecosystem. I mean, any like basic investors should be able to understand like what is investable and what isn't, right? MakerDAO reveals ambitious new endgame plans with 2 new stable coins. But Cryptoviser, we don't need stable coins. Okay, your chain may not, but every other chain is like running of the bulls, that speed into these endgame plans, and that does include stable coins. So they're talking about new stable and pure DAI. The strategic initiative aims to replace the existing DAI stablecoin and bolster the MakerDAO ecosystem. Now, keep in mind, MakerDAO is a decentralized autonomous organization known for the DAI stablecoin, and they're planning to undergo significant changes with their end game plan unveiled by the MakerDAO co-founder. The plan includes the introduction of new stable and pure DAI with intentions to offer enhanced decentralization and stability features. These tokens are expected to replace the DAI stablecoin with a market cap of $5.5 billion currently. This endgame plan marks a transformative phase for MakerDAO with the intent on scaling the DAI stablecoin supply to $100 billion and beyond. This initiative aims to address the limitations of the existing DAI stablecoin by providing more resilient and decentralized stablecoins. The co-founder believes new stable will cater to mass adoption, while pure DAI will target users who value extreme decentralization and resilience. So we'll see where that goes. And keep in mind, the Bitcoin mining stocks, as we talked about, right? Huge opportunity. We're now hearing that Bitcoin miner Marathon Digital is in talks with Kenya to help their green energy ambitions. Kenya's president also wants to build a regulatory framework for crypto with Marathon Digital's help. So you see, Marathon is expanding outside the US as well. And so from a value proposition standpoint and a market cap perspective, this could be huge for the company, especially if they can do, mine Bitcoin and earn yield on kind of the advisory role that they're going to have in that country. Again, this is a $6 billion market cap stock. How high can it go, especially when these Bitcoin mining companies, they're not making that much money? I don't know. But there's a lot of Bitcoin mining stocks to choose from, and a lot of these are under $1 billion market cap. Great opportunity potentially to make some huge gains. Not financial advice. As always, do your own research. Let me know what you guys think about all of the discussions we had today. Don't forget to give the video a thumbs up, hit that subscribe button. See you guys on the next video, and crypto on.